Hello and welcome back to another video. I hope everyone had a great weekend and is looking forward to the week ahead. A lot of companies have earnings coming out. There's a lot going on with the US futures, the Asian market. So, very exciting times at the moment. So, today I want to talk about 4 ways to consistently grow your stock account. And this is primarily focused on day trading and swing trading, okay? So, let's get into the first stage, stage one. So, in my opinion, the first thing you want to do, especially as a beginner, is always focus on the quality of the patterns. So, no downtrends. When you're trading at a downtrend, it is against your favor and it's just going to make life a lot more difficult for you when trying to make profits and when trying to achieve your personal goals. When the overall direction is in your favor and it's an uptrend, you are more likely to make profits. You are more likely to get out with profits because that's just how momentum works and that's just how it works in the stock market. You don't want the overall direction to be against you because that's just senseless. So my opinion at first is to set a percentage growth rate per week. So for example, 2 to 3% a week. Okay, and then really sticking to that goal and achieving that goal every single week consistently for a few months. And now the key here is to lock in your profits. You don't go broke when you lock in your profits. It's as simple as that. You cannot lose when you make profits because it's profits. So for example, like how many times were you in the green, then you went to the red, and then for example, because you were in the green, you thought, all right, it's gonna go up more, so I'm just gonna wait, but then it started to go down, and then you're like, oh, all right, no, it's gonna go back up again, and then you're in the red, and then you're just waiting and waiting, and then you just had a total loss, and then because of that, you get out of the market, you don't want to trade anymore, and you've just totally messed up. I mean, that actually happened to me a few weeks ago with the stock Nikola Motors. I had made a trade. I'd bought it on a Monday, and in pre-market it reached its overall highs of $93 a share, and I thought it was going to go even higher, but I was greedy, and in turn what happened, it just dropped in the span of 5 minutes. I made from a 300 potential 300-pound profit to a only 10-pound profit, okay? And after that, I didn't want to trade for a whole week, so it does impact you mentally, and it is a problem. So that's why it's really important to lock in your profits. Get in and focus on that. So, for example, like I had mentioned in another video, it's not about focusing on a dollar profit, but more of a percentage growth. Because what that's going to do is reinstate that positive reinforcement. It's going to get you to keep on thinking, all right, I can make gains, I can make profit. I'm going to keep trading. I'm going to keep trading instead of trying to go for that big one trade, mess up, and then just leave. So it's always important to be consistent. And the final thing in stage one is to aim for stocks that are in the $10 to $50 range. I think this is a good starting amount for beginners because even if you're investing $50 and you buy one share that costs you $50 and say you make 5%. Sure, the dollar amount might not be incredibly huge, but the fact that you've made 5% is a big thing. And that is the idea that you want to focus on, is that you made 5% and that you can make 5% in the future as well. It's all about growing your accounts, about growing consistently. So like I said, it's about focusing on the percentage growth rather than the dollar profit, because if you focus on the percentage growth, you're going to have that positive reinforcement and it's going to do you so much better in the long run. Okay, so once you feel like you've got a grasp of that, you're able to get consistent returns at a 2 to 3%, you're distancing yourself from your emotions, then we get on to stage two, okay? And my first thing I would do is to increase your weekly percentage growth rate. So example would be 3 to 5%, maybe a bit more. It's depending on what you feel, what you started off with, and what you realistically think you can achieve, okay? Once you have that, I also recommend you guys start getting into short-term swing trading. So that's swing trading is basically when you own a stock overnight or for a few days instead of multiple trades throughout the day. Then that's called day trading. So in the short-term swing trading, you're going to view charts at a 180-day view with a 4-hour analysis. So they're longer time frames. And basically with that, it's the same thing like as in day trading, but like you're focusing on the patterns, but patterns in a longer time frame. So if you see that stock, like for example, if you see the MACD indicator is about to turn over, okay, it's about to cross over and go up, and you see that's kind of undersold, but it's not like in the minute chart, it's a day chart, 180-day chart, then you can buy that stock, hold it for 2 days, see those profits grow, and then lock in your profits and get out. So the benefit with this is that there's a lot less of your time being spent on this nonstop on the screen, and it tends to be the margin of profit is also greater. Um, Especially if you're in the US, a lot of you guys are using Robinhood, you're gonna have a PDT rule, which is a certain amount of trades you can do per week. So if you have like what I think 3 weeks, 3 trades per week, so that's you can use that as a motivation to make sure that you go aim for the higher quality trades and not just over trade every day, every day, every day. And you're actually putting in the effort, you're putting in the work to understand what's going to be profitable and what's not going to be profitable. So once again, lock in your profits. The idea I go by is like, will it matter in 5 years if you miss out on an extra 1 or 2%? Or will you get a big loss? If you get a big loss, you're going to probably get deterred from trading and then not trade for a while, and you're going to have a negative relationship with it. That's what you want to think. Like, for example, you lock in your profits, but you didn't make that 1 or 2% more you could have made. Are you going to go and tell your friends or whatever, oh yeah, I missed down that 2% profit, or are you going to be like, hey guys, I made a profit? It's the positive reinforcements, constantly conditioning yourself to know that you can make profits and that you can be consistent with it. Because even if you do that, you've already beaten 95% of the stock market, because 95% of the traders don't make consistent gains. And that is because I think primarily greed and emotions getting in the way. So it's so important to lock in your profits, because you just can't lose when you lock in profits. So stage 3, once again, increase your weekly percentage growth. For example, 5 to 7%. And like I said, lock in profits. And now you can also start looking at trends such as dip buys. So dip buys is even in swing trading, if you see a company and it's pulled back a bit, not breaking the support, you have to be sure that you understand that it's not going below the support, because if it's below the support, then it's a downtrend. But if you understand that it's just a pullback, and it's using a certain value as a support line, and it's consistently using a value as a support line, as a share price as a support line, then you can potentially buy in the next time you see the stock is approaching. So for example, say a stock is like, you bought it at $50 and you notice that it tends to pull back to $43 every 2 days. It's going to $42, but in 3 days you notice that $42 is the support. So the next time it reaches $42, you can buy at that dip, and then when it reaches, for example, 50, you sell out, and then it'll dip again to 42. It's about seeing those patterns, understanding those patterns, and you can really make good amounts of profit from that. But you have to be very careful, and you have to really study the patterns to understand that it's consistent, or it's a whole other downtrend. So I'll make another video on understanding difference between a pullback and an overall downtrend breaking through the support. So stay with that. It's a very good idea, and it's a very good way of making profits, I think. So the next thing, which is very, very important, is the golden ratio. So the golden ratio is basically when your overall margin of profit exceeds your margin of loss. Just an example of this is, say you're about to go into a position and the margin of profit is 10%. Okay, and your stop loss is set at 2%. That means even if, for example, if you're a Robinhood trader, you only have 4 trades a week, even if you miss out on 3 of those trades, you lose 3 of those trades, your stop loss set at 2%, so you lose 2%. So that's 6% loss on 3 of those trades. But if your fourth one, just one of those trades, you get a 10%, you get the profit that you had envisioned in that 10%, then you've already made 4% on that day. So it seems very easy in theory, and because it is, it's just that a lot of people don't take the time to analyze what is their margin of profits and setting a stop loss that is backed by data. A lot of times people, including myself at first, would just put a stop loss because I lose, like, okay, I put a stop loss, which makes me lose 20 pounds today, 20 pounds today. I was focusing on the dollar value instead of the actual percentage value. But when you focus on the percentage and using the golden ratio, you can gain so much profits, and you can gain it in a very consistent manner, which builds habits that is positively reinforcing you to trade and to make profits on a daily basis, okay? So the golden ratio is extremely, extremely important. Understanding what could be your margin of profit, understanding what is a good stop loss, and how you can penetrate that data and use it to your own advantage, okay? The next thing is to be very, very prominent in risk management. So cutting your losses. You got to know when to cut losses. This is one of the hardest things. Obviously, I'm still suffering with this. It's a huge, huge issue. It is knowing when to cut loose. It's understanding when something is going below the support and it's not just a pullback, but it is an actual change in the stock. So a lot of factors go into this. The fundamentals go into this. The technical analysis side, you got to be sharp. You got to be viewing the charts. You got to understand the patterns. You got to see when something is going against you and when something is just pulling back. You have to separate your emotion, because you might think, oh, no, I know this company. I know, I've done my research. If something is going below a support line, it's breaking that support line, to your ego, it might seem that you're wrong. And so you're going to prove to that chart that you don't want to be wrong, so you're going to stay in the position. But in reality, you're not proving anything to anyone. What's actually just happening is you're losing, and you're losing out on that position, and you're not making any profit, but you're just holding a losing position. So it's very important to separate yourself from your emotions, understand the risk management, and cut those losses when you have to. Okay. And then finally, for the next thing in stage 3 is swing trading, like I mentioned before. And the whole idea about this is focusing less on trading every day, and it's more about getting more quality positions that still offer you high margins of profit, but take less of your immediate attention. So this is an ideal situation, in my opinion. And finally, stage 4, once again, increase your weekly percentage growth, for example, 10 to 12%, or whatever it is that you feel comfortable with, that you can make on a consistent basis for a few months before moving on to the next percentage growth. Focusing on the golden ratio, like I mentioned. And then another thing you have to do is keep evolving your trading style. You got to keep developing. You got to keep reading the patterns. One thing is not going to work forever. One stock that you're trading, 2 ETFs that you're trading, it's not going to work forever. It's just not a thing. You need to be interested. You need to be seeing what's going on. And you need to evolve your trading styles to make the most out of your positions. And finally, you got to keep up your inquisitiveness. You got to stay interested, because if you're not interested, if you're not interested in growing your account on a consistent basis, if you're not interested in achieving consistent profits, then you're just not going to. It's that simple as that. You need to be interested in the stocks you're into, the patterns, the idea that you want to grow and better yourself than how you were the day before. It's those sort of things that you need to focus on in order to be consistent in developing these gains, okay? If you are not, it's just not a sustainable thing. It's as simple as that. If you're not going to like it, you're not going to spend as much effort on it, and you're not going to keep up with it. It's very simple. There's no need to lie to yourself. There's no need to trick yourself. Understand if you enjoy it, why you're enjoying it, and how you can make this into a long-term goal, okay? And of course, last thing, lock in your profits. Lock in your profits. I think I've already emphasized that enough. And I believe in these 4 stages, it's going to breed consistency, it's going to breed discipline, and it's going to breed a higher level of understanding and growth for your accounts. It's all about how much time you're putting in, how much attention to detail you're giving, and exactly how much you want to make and how much consistency you want to create for yourself, okay? So I really hope that this video helped you. If you have any suggestions on what you'd like to see, please let me know down below. Drop a like if you gained value. Subscribe if you're new around here. I post every day, and I will see you all tomorrow.